And it's a new week. Good morning, good evening, wherever in the world you're watching from. It's Business Morning, live on Channels Television. I'm Ladi Williams. First off, let's take a look at the market to see oil prices fell more than $3 today as fears over weaker fuel demand in China grew after its financial hub of Shanghai launched a planned two-stage lockdown today to contain a surge in COVID-19 infections. The market kicked off another week of uncertainty, buffeted on the one side by the ongoing war between Ukraine and Russia, the world's second-largest crude exporter, and the expansion of COVID-related lockdowns in China. That's the world's largest crude importer. Brent crude futures slid as low as $116 a barrel, and trading was down about $3.09, about 2.6%. U.S. West Texas Intermediate crude futures hit a low of $109 a barrel and was down about $3.28. Both benchmark contracts rose 1.4% on Friday, notching their first weekly gains in 3 weeks, with Brent surging more than 11.5% and WTI climbing 8.8%. And back here, as part of measures towards boosting food security, the federal government has unveiled the second maize pyramid in Kaduna State under the Central Bank of Nigeria and Maize Association of Nigeria Anchor Borrowers Program. Speaking at the event, the governor of the Central Bank of Nigeria, Godwin Emefiele, says the Anchor Borrowers Program has achieved its desired objective aimed at curtailing food imports and making Nigeria self-sufficient in maize production. Do take a listen.
The need to bridge the gap between the demand and supply of maize is what necessitated the launch of the Anchor Borrowers Program by the Central Bank in 2015, aimed at creating a linkage between anchor companies and smallholder farmers. Over 150,000 farmers have so far benefited from the program, and consequently, maize production in the country has since increased from 10.5 million metric tons in 2015 to 12.2 million metric tons in 2021, with an annual consumption estimated at 12.38 million metric tons. The launch of 21 maize pyramids in Kaduna State by the Maize Association of Nigeria is the second after the first was unveiled in Katsina State in 2021 and is aimed at celebrating the 2021 wet season farming under the Anchor Borrowers Program.
We all remember the COVID-19 pandemic of 2019 and the security challenges caused by enemies of the nation, which has also affected the volume. This was a very big challenge for food production. Despite these challenges, and bearing in mind that money given for this farming is a loan, to resilient Nigerian maize farmers were able to produce what is being unveiled today.
The relentless efforts and support of the administration of President Muhammadu Buhari to diversify the economy through agricultural sector, which contributes almost 30% of the gross domestic product, is being manifested here today.
Governor of the Central Bank of Nigeria, who is represented by the Director of Development Finance, Yusuf Yila, is impressed with the results of the program. He says more is being done by the CBN.
The Central Bank of Nigeria is committed to financing over 600,000 hectares. Our strategy is also hinged on improving productivity by providing this funding through the financial institutions to the various anchors and the commodity associations to enable them utilize high-quality inputs and good agronomic practices to boost output so that we not only meet national demand, we'll begin to look at the export potential, which will earn us foreign exchange.
The Anchor Borrowers Program also receives legislative and royal commendation by the Chairman, House of Representatives Committee on Agriculture, and the Emir of Zazzau, Nuhu Bamali.
So I'm so delighted, when this program came into being, seeing Nigerians, producing food for themselves, not being imported from foreign countries, both rice and also maize now, which is remarkable.
I believe with the support and the backing of the CBN and the enabling environment to ensure that There is banning of all foods that we depend on importing from other countries of the country. We save foreign reserve, we save all the opportunities that is slipping away from our hand as a country with a teeming population of more than 200 million.
One of the advantages of the Anchor Borrowers program is providing the offtakes for farmers to sell their products at reasonable controlled prices, thereby reducing the unwholesome activities of middlemen.
All right, now to our first conversation. The value of capital importation into Nigeria increased by 26.35% to hit 2.19 billion in the fourth quarter of 2021. And that's according to data from National Bureau of Statistics. More data shows that Lagos State attracted the most investment with 90.66%, about $1.98 billion of total investment flowing to the state. Joining us now is Mr. Samuel Ugube, Commissioner for Economic Planning and Budget, Lagos State. Good to have you on the program. Good morning.
Thank you very much. Good morning.
Yeah, so again, Lagos State, attracted the most investment, in 2021. Are you impressed with this figure, and what does it tell us?
Well, certainly I must be impressed with the figure. There's still a long way to go. We don't only want to lead in Nigeria, but we want to begin to lead in the African continent. So yes, we are excited. Lagos is home for some of the brightest and most innovative Nigerians. It's a melting point for ideas and it's a center for thinking and entrepreneurship in Nigeria. We believe it's home to some of the largest corporates in all sectors in Nigeria, and it's a land of dreams and opportunity. It's currently leading in terms of the startup support system for the tech ecosystem, and we have committed to a very long-range planning by committing to a 30-year development plan, which basically creates a pathway for investment. We are extremely intense with infrastructure development on both the hard side and the soft side of things. But what it does is also speaks a lot to the quality of leadership that Lagos has experienced over the years, from Bola Ahmed Tinubu through to the current governor, Babajide Olusola Sonu, who has shown very uncommon drive for performance, execution, discipline, and courage in the face of very daunting global economic challenges. It is gateway to investment into Nigeria, actually, and that is why you see we are not really surprised as to the size of investment that has come into Nigeria compared to other states of the Federation. But like I said, we have our aim on the African continent. Right. As we approach the African Continental Free Trade Zone, the fight is not just between Lagos and other states in Nigeria, but it's the dream to become a leading center in Africa when it comes to that.
Yeah, talking about as a gateway, for investment into Nigeria, what can other states, learn from Lagos to attract more investment?
I think first and foremost, it has to be that the leadership must be right, and there must be a sense of continuity and commitment to the general good of all, right? We must move things from politics to development, and we must be able to pull together as part of a nation to deliver great outcomes for Nigeria. I think other states need to also see that without a vision, actually, the people have nothing to rally around. So we must come out with visions and strategies that are clear enough for our citizens to rally around us in government, and then they push the economic agenda and the social agenda. Lagos State has launched what we call the Deal Book. So it is transparent that you can see what Lagos is about to do. When you combine that with the 30-year development plan, long-term investors can then predict over a long range of time what the government will be focusing on and what the people will be rallied around. So investment becomes easy. Also, the discipline of ensuring that your finances are within sustainability ratios, and the discipline and the rigor of resilience that you drive. For example, the Fish International Rating Agency upgraded Lagos from AA to AAA, All of these things tend to drive investment. And so that financial discipline, operating resilience is also important. But above all, investment is about the people, really. And we must actively rally our investment communities, rally the private sector, rally the media who speaks to the people, and rally the citizens as large, which is one thing Lagos does from the budgetary process to our strategic planning. We always recognize that we must carry the people along. We must seek to understand what their aspirations are, and we must lead on their behalf rather than ramming things through their throats.
Right. But looking at it on a broader basis, now we see on a year-on-year basis, capital importation into Nigeria fell, in 2021 to about $6.7, billion. That's a decline of about 31%, from $9.68 billion in 2020. What do you think contributed to this?
Okay, when you look at the breakup, really, you will find out that a lot of the drop came out of investments around the money markets, right? The money markets are short-term instruments which portfolio investors want to take quick profits from. So when you see that there is a relative shrinkage between the rates internationally and the rates within Nigeria, because the international environment is responding quicker to changes, right? You then find out that as that rate narrow, investors tend to stay in international tradable currencies like the dollars and the pounds and the euros, especially given that the opportunity takeout is narrowing out. And so you don't want to take additional risks on the foreign exchange side, especially even given the challenges with investment repatriation, which our regulation tends to present. So that is where a lot of it is coming from.
Yeah, because of a lot of analysts have, talked about, the problem with forex scarcity and, a myriad of issues, leading to this decline. But, looking at the breakdown, we saw capital importation into tanning, had the highest flow of about $645.59 million. That's about 29% of total capital, imported in the fourth quarter. It seems the sector is getting a lot of attention.
Well, Nigerian hide remains one of the highest quality hides in the world. I think that, yes, it is gaining attention, but what I think is happening is an equity investment that must have gone in that direction. So, yes, you are correct, but what it speaks to also is that every part of this country can be extremely productive. It's my view that our market spaces across the country needs to be strengthened, and therefore Lagos, being the largest market in Nigeria, needs to be viewed as a national asset. We are capable for stimulating production across the country because, again, as a gateway, you will find out that people come into Nigeria through Lagos and want to also do exports out of Lagos at the same time. So we must hold together as a country. We must hold together as states. We must learn from each other, and we must adopt best practices in governance, especially in the areas of transparency, accountability, and performance. The truth is that investment flows better in an environment where transparency, accountability, and performance management is well guarded and well implemented. And I think that's what we're seeing in Lagos. But there's a lot that still needs to happen, both in Lagos and nationally, as we take on the challenges in the continent as it comes.
Right, but what are the plans, to attract more investment, into Lagos? We're looking at 2022.
Well, like you see, Lagos is extremely strong in infrastructure development as we plan for the future. You see all we are doing in the deep sea port, in the expansion of the Lekki-Ekpe Expressway with concrete rigid pavement. All of this is supposed to stimulate additional maritime capacity around Lagos. We also just launched our deal book. The Office of SDG and Investment launched the deal book so that investors can see exactly what Lagos is thinking about from the investment side. But we're also partnering a lot with the private sector. As you notice, we just signed an MOU with FAN, to develop infrastructure along the airport corridor, as well as investment opportunities coming out of our waterways, out of our road infrastructure, and improve regulations in all of those areas. You see the investment in rail, and that investment will continue to improve the productivity of our people as their journey times are cut short from about 2 hours, 30 minutes to almost 30 minutes. All of that helps. We already have launched, the governor has launched a committee that basically, a council that drives the ease of doing business in Lagos. And we are following very eagerly and very closely around improving the ease of doing business. It starts from how the people are able to engage the government digitally. And we are launching the Citizens Gates, which is a platform around which the citizens will engage us realistically and practically. And then basically to ease out how easy it is for people to interact with government services and dealing generally in terms of our titling rules and procedures and in terms of our construction permit. We are digitizing that entire process, and we expect once we complete it, it's going to lift very dramatically the ease of doing business in Lagos.
Quite interesting. But, you know, with geopolitical tension, you know, impacting oil prices, we see globally cost of living rising, even, you know, right here in Lagos. You know, what's being done to, you know, alleviate some of these sufferings, you know, of the people and to diversify the economy of Lagos?
So the economy of Lagos is diversified. There's no one sector that drives the economy of Lagos completely through and through. But in addition to that, we must understand that there's a global challenge coming out and prices are going up. It's for one thing, the government will act to make it easier in terms of our social intervention projects. And there's a lot that will be happening this year in that regard. You saw that we just launched also our social protection policy as a government, which is for the people. And the idea is to say no one really needs to be left behind. We don't see anything that devastates the poor more than a health challenge without the capacity to pay for health care, which is why the Lera Eco health management and health insurance scheme works. It's heavily subsidized, and we encourage citizens to participate very actively with it in that regard. But a very important point has to also do with the culture of our people. When prices rise, it's also nice that we begin to learn to rationalize our spend in favor of our most strategic and prioritized spend. Our energy cost, we need to learn to manage our water usage, our energy usage, so that our disposable income can capture much more than less. These are not the times where you leave your lights on, irrespective of where in the house you are. These are not the times where you take your car to just to drive to the supermarket, or maybe a journey that you can walk for 5 minutes. We need to begin to encourage ourselves to conserve, right, our resources, to spend on the most and to spend very efficiently. These are times where you need to enter buses instead of insisting that you must take your car out as a lone occupant of the car. We must pull together to save costs as a people and learn new cultures that help us thrive in the face of current challenges.
Pulling together to save costs. Thank you so much, Mrs. Samuel Egube, Commissioner for Economic Planning and Budget, Lagos. It was great having you on the program.
Thank you very much. It was my pleasure.
Thank you. All right, so after the break, we look at Nigeria's retail industry as it recorded sales boost in 2021. That's in a moment. Do stay with us. This is Business Morning. All right, now to our next conversation. According to the 2021 Global Retail Development Index, Nigeria's total sales had been trending south, falling to $105 billion in 2019 from $109 billion in 2017. But in 2021, we've seen a rise to about $108 billion. Well, for analysis now, we have Ruke Awari-Tafe, CFO and co-founder, Trade Depot, join us on the program. Great to have you. Good morning.
Hi, good morning. How are you doing?
Great, fine, thank you. Well, but after 7 years of retail sales, trending down, we've seen an improvement in 2021. What do you think contributed to that uptick?
I mean, I think you would have actually seen a much greater improvement if not for supply chain constraints brought about by COVID. I think what we are seeing today at the retail level is even an inability for most parties to meet the demand with the growing population, right? That is happening especially around the informal sectors. So there's a significant growth in demand, but that demand is really focused on essentials as opposed to any form of ostentatious goods, so to speak.
Right, but can you give us a quick overview of Nigeria's retail sector?
Okay, so I mean, when you look at the retail value chain today and the retail sector in Nigeria, you have majority of the Nigeria's retail sector, I would say close to 95% of that retail sector, right, is informal. 5% is your modern trade and your formalized hypermarts and that kind of retail establishment. So majority of trade is still happening through those informal retailers. And today, manufacturers have to figure out how to get goods across these informal retailers because you have over 1 million retail stores across Nigeria alone. When you want to figure out distribution for your products, you need to basically figure out how to get your products on the shelves of these informal retailers. So the retail value chain is really highly fragmented, and it is predominated by the informal trader, of which probably about 83 to 85% of them are actually women that are driving and powering this particular sector.
Quite interesting, talking about the challenges, but what role can technology play in addressing, some of these challenges?
I mean, so when you look at these parties in the sector, of course, focusing here on informal retail, the predominant challenges that they seem to have is first access to reliable supply at competitive prices. Your typical retailer has to go to multiple markets or close their shops for a day, half a day, just to be able to restock their shops, right? That is really a supply chain problem. And we believe that connecting and digitizing that retailer and connecting them directly to sources of supply enables them to build their businesses faster, but really transforms that sector. And that's where really technology comes to play a key role. Now, once you have done that digitization, it means that you are on the path to creating some form of economic identity, right, for these retailers, because once you digitize them, you are able to capture their transactions, and that gives a sense of what their business size is. That allows you to start to build that profile for them that enables you to eventually credit score them and then give them access to products on credit, which then allows them to grow their business, because that is another major constraint that they have, where your typical informal retailer has no economic identity and because of that has no access to credit, or even when they want to get access to credit, it is so highly priced because they are flagged as a very high risk. Whereas looking at those businesses, these are very thriving businesses, right, that are the bedrocks of various neighborhoods and are the means by which those neighborhoods get their supplies.
Right, and talking about credit, a couple of companies offer, buy now, pay later as services for retailer. How's that going?
So, I mean, we have found that really very interesting. It is something that we have been running. We ran pilots initially last year, and Q4 last year, we raised some funding to be able to significantly scale that out. What we have seen is a very significant impact on their businesses. You would find retailers being able to extend the products, the range of products that they are carrying, right? And that has resulted in probably 2 to 3 times increase in turnover in certain categories for them. right, which is very, very significant when you look at the kind of businesses that they are running, that these businesses are entirely based on turnover. So we see that as a very, very key trigger for growth in the informal retail sector, and which is why today we provide those buy now, pay later services, right, for not just only goods purchased directly through our commerce platform, but also in partnership with other authorized pay partners, right, so that the retailer is really able to fully benefit from those kind of facilities that would enable their businesses scale rapidly.
All right, looking at this model now, what kind of risks are associated with the buy now, pay later model?
Well, so I think one of the key things that you would find and that one has to mitigate is how do you build that economic identity, right, for that party? Because lending to somebody that, right, or providing credit to somebody that you really have no track record for is really a very high risk activity, right? So being able to mitigate that by leveraging multiple data points, right, which today we are able to leverage through the person's transaction history that enables us to see how much they have been buying, what is their buying behavior, when goods are brought to that person, does the person have cash to be able to pay for those goods, right? And that enables you to, over a period of time, build that profile that allows you to mitigate the risk of not knowing, right, what this business is capable of. You are then able to determine how much credit, what the credit limits should be, right, for what duration can you extend credit for this person, what should the collection routines be, right, for such a retailer. And that basically allows you to mitigate that risk, right, but which, if you are not able to do that, then really you are really exposed to very significant risk because of lack of information and data.
Quite risky, and so you don't have to start naming and shaming people. But how's the market, you know, responded to BNPL services? Are retailers coming on board?
Yes, I mean, so we see very, very significant uptick today, and we see.
Right, he was talking about the BNPL service, and you know, was trying to tell us, you know, if people actually are coming on board, because retailers are using, you know, some of these models to actually find a way to get more sales, you know, of their products with the buy now, pay later model. He was trying to explain to us there, you know, the risk and, you know, how people are actually responding to this new model. We'll try and get Mr. Oruke back if we can get him back. I was also going to talk about, you know, how geopolitical tension is affecting, you know, rising cost of living, and you know, how retailers should actually manage the situation right now, you know, with so much as we have supply disruptions and all of that going on. We'll try to get Mr. Oruke back. I don't know if we have Mr. Oruke. Are you there now? Okay, I guess we don't have Mr. Oruke at this time. We'll try again to get him again. All right, so let's take a look at, you know, what's happening. All right, Mr. Oruke, do we have you back now?
Yes, you do. Apologies.
Yeah, no, the network can do that, you know, sometimes. But you can finish your thoughts. You know, we're talking about if retailers were coming on board, you know, on the BNPL model.
Yeah, I mean, so I was giving the story about the lady in the neighborhood who was buying flour and basically was able to increase her turnover, right, significantly, right, by 1.2 million. And we see those kind of trends evolving where people are then able to leverage these credit facilities to significantly grow their business. So the uptake is pretty fast. And I think the real to-do is being able to make sure that you gather that data so that you can build those economic identities for these parties and then support their businesses to grow rapidly.
Quite interesting, building economic identity. Well, but, you know, we have rising inflation right now, geopolitical tension, rising cost of living. You know, what should retailers and manufacturers in Nigeria be doing right now?
Well, I mean, building efficiencies are crucial, right, when you have these kind of challenges, because margins tend to become slimmer, right, for all parties, and you don't have room to have basically any wastes in your supply chain, right, processes, or in any of your operational processes. So trying to really leverage technology, right, both for the manufacturers to be more efficient around how they do their distribution, for the retailers to be more efficient around how they do their sourcing, right, this would be crucial in the kind of economic climate we have today.
And also with, dwindling consumer demand at this point, how do they handle that? Does BNPL play into that?
Yes, so when you look at the dwindling consumer demand is really not, it is a contraction around the range of products that are being demanded for the core staples, right, which are your core FMCGs, your everyday food, right, items. Demand is not actually going down for that core, the core base of those items. So the retailers leveraging BNPL to be able to stock more of these kind of products, right, which are your staples, your semovita, right, your various items, your beverages and the likes, right, that is very crucial for those retailers to be able to ride out this period. The typical high value items that they would have stocked that gave them higher margins, right, demand for those items would have dropped, right? So they need to be able to cycle faster and increase their turnovers to basically retain the revenues that they have been making as a business.
Right, quite interesting, but the beginning of 2022 has been quite, tough. We've seen a lot of things happen, from tensions to, rising costs of living. But looking at, 2022, what's your outlook, going forward?
I mean, so
and that's for the retail industry.
Very positive. Yeah, absolutely. We see very positive trends in that retail industry, right? I think the key thing to always rationalize is that there's some direct correlation between the growth of your population and, right, how well retail does, right? So as your population also starts to grow, we do see that trend where retail would need to be able to serve that growing population. Otherwise, how else would that population be fed, right? So we see an outlook in 2022 where there would be significant growth across that sector. It would be more geared towards a fair balance between indigenous production, right, where you have local manufacturers, right, being able to meet the demand gaps that currently exist. And that would really bring about significant growth, because quite a number of these parties have been investing, right, in 2021 to be able to meet the growth in demand that is projected for 2022.
And what kind of policies would you like to see, from the government to actually, boost this industry?
I mean, so you find that the sector, because it is very, very, very informal, right? Any policy that is rolled out by government, right, to support the SMEs, right, of which there have already been quite a number, right, that you have seen over the past 24 months. But that continuous drive to continue the growth and support of SMEs, since 95% of commerce is happening through that sector, right? Those kind of policies would always be very favorable, right, to the retail sector, would lead to significant growth.
All right, we'll keep watching that industry in 2022. Thank you so much, Mr. Ruke Aoritefe, co-founder and CFO Trade at Depot. Thank you so much for coming on the program today.
Great. Thanks a lot for having me.
All right, now let's take a look at what's happening in the market. We have Ini right there on the other side. Good morning, Ini. Beautiful Monday morning here.
Beautiful morning to you too, Ladi. I see you've been busy at very serious conversations going on there, from retail to Lagos State, leading the conversation. Well, let's go to the market now. And today we'll start with the fixed income market. When we look at the federal government bonds, let's start from there. 18 deals on Friday. You know, this market, they don't have the cumulative figure. Value of 8.19 billion naira. The week started kind of slow last week, but
all right.
The week started as a lull. With a lull, it wasn't a very sharp week, but later on, it picked up, but it was only 18 deals there in the federal government bonds. And then we move over to the central bank bills, and then we saw only 2 deals there. That was on Friday. We have Tolulope Shabanjo joining us now to give us a breakdown of activities that took place in the fixed income space last week. Hello, Tolulope. Good morning.
Hi, good morning. Thank you for having me.
Good to have you. Good to have you, Tolulope. So I wanted to know, just give us a wrap-up of activities in the markets last week.
Okay, thank you. So last week, the week started with the MPC meeting where the CBN Monetary Policy Committee kept all the indices stable. The LPR rate was kept at 11.5, the CRR kept at 27.5, and the liquidity ratio maintained at 30%. Also, that same Monday, we saw the Debt Management Office coming to the market to raise a total of 150 billion was on offer across the 2026 and 2042 maturity. However, we saw subscription at a high of 598 billion, and the DMO was only able to raise 296 billion, while keeping stop rates lower than the previous auction. On the 2026, it closed at 10.15%, that's an 80 basis point decline, while on the 2042, we saw it close at 12.7%. That's a 30 basis point decline from 30% where it closed at the previous auction. As the week progressed, we saw some demand coming to the market as a result of the FAC inflow, which came in late on Friday. So this week, we expect to see a bullish sentiment, particularly on the treasury bills market, the short-term market, as a result of banks trying to avoid the discretionary share by the CBN, which is expected to come on Thursday. Also, we expect a retail SMIs auction this week. So we'll see a lot of activity, particularly on the short-term instrument, the treasury bills space.
It was also a factor that was looked upon by the investors last week.
Sorry?
The cash reserve ratio, and it was a major factor last week.
Yeah, that's correct.
Just after, this quick break. Welcome back. Still watching Business Morning live on Channels Television. We're drilling on the markets now, and we have Ini right there with the details.
Yeah, thank you so much, Ladi. Well, unfortunately, we couldn't complete our thought, but tomorrow is another day. We'll talk more about the CRR. Ladi, I know you follow the MPC, and
exactly.
Remember that also that's one of the ways, I mean, the credit reserve ratio that the banks are expected to, at 30%, the banks are expected to keep at that, and there have been some talks around that. It was a major factor of consideration for investors last week, so it would have been nice to know if it will be this week again, but we'll do that tomorrow. Do join us. But now let's see a little bit more of what happened in the fixed income space. The CBN bills had only 2 deals on Friday. This is for just Friday, at 4 billion naira, and unfortunately, nobody was interested in the treasury bills on Friday. The OMO auction, remember there was an auction here on Monday last week, and then the results were posted on Thursday. There were 13 deals on Friday, and the most favored there was the one that's going to mature later on this year in October. Some people are going to cash out there. In NASD DOTC market, it was in the positive last week, up almost 2% there. The market cap went up to 597. Remember, last week, I think 2 or 3 days, it was just so unchanged. Nothing was going on there. But I mean, at the end of the day, we had a positive trade there. And the volume traded was 2.26 billion, valued at 1.3 billion naira. Deals executed were 21 there. We have Rotimi Fakaye Journal to tell us what happened in the equities market. We see that the equities market last week had a lot of mixture there. Hello, Rotimi. Good morning. Tell us, how was the market last week? What are some of the details that stood out for you?
As we started seeing the adjustment of prices of equities due to dividend payment, we saw the likes of UBA, GTCO, and Transcorp Hotels being marked down last week. More so for the fact that more are still going to come this week. We saw the All-Share Index closing negative, and the month has not really been very fantastic in terms of the All-Share Index movement. We've seen the month-to-date position of the market is 0.91% drop, whereas the year-to-date position is 9.9% positive. So all in all, we are still very much in the green. And I believe strongly that even as the market may suffer a further depletion of the market capitalization due to price adjustment for dividend payments, I still believe that the beginning of the second quarter will still portend a very good outcome for the market. So I think with the way it is right now, the investors are actually smiling home, at least with getting fantastic dividend from various equities listed on the exchange. So yes. I believe it's a harvest time for investors.
Yeah, harvest time indeed, because we've seen a persisting profit-taking in the market for a couple of weeks now, so much so that we have now gone down from our 47,000. And there seems to be a lot of interest in Nestle, UBA, GTCO, MTN. These are not bad times. These are just people, investors, taking profit, I guess.
Yes, I think it's good for them, those who are taking profit, and also good for those who are waiting to earn the dividend. At least with a dividend yield of more than 10%, I don't think you can get anything like that in the fixed income market. So the equity market still remains the destination of choice for investors that are forward-looking and have long-term perspective. Another major event for last week was the suspension of the trading of Access Bank because the Access Bank is being delisted, and Access Holding PLC will be listed this way. So I think we are having that in the market, and it's going around for most of the major banking stocks. We've seen that of GTCO, LBN in the past, FCMB, and I think we just have a few that are not holding all codes. So I believe strongly that with this arrangement, it may really be good for some, but it may turn out being not very good for others. But it will be very good for Stanbic PLC, Stanbic Holdco, very, very well, and I think it's giving them a lot of.
Would that be your outlook for this week, seeing that more dividends are expected?
Definitely, because today Zenith Bank PLC will be adjusted for dividend payment of 2 Naira 80 kobo, which is more than 10% of the current price of the equity. And I think we're going to have much more also, and maybe more new declarations. We are waiting the corporate action announcement of Presco of Total, and I think those ones also will have a lot of effects, positive effects on the market.
Right. Thank you so much, Rotimi Fakayejo, capital market analyst, for sharing your thoughts with us. Well, Ladi, I think that's the most. Right. That's the most we can take. Last week was not very good for the equities. It was just a bit fair for the fixed income. Right. So, but you know, we always keep our fingers crossed and hope for the best.
The month of March, hasn't been so good to the equities market, but
it's being good for the crypto now.
Oh yes, the crypto market.
Especially with what's going on with Russia.
Exactly, and we're going to drill down on that in a moment. Thank you so much, Edie.
Thank you.
All right, talking about the crypto market there, we see the market cap there at $2.11 trillion, sitting pretty above the $2 trillion mark. It's up about 4.60%. Volume traded, $99.96 billion traded in the total crypto space. That's Bitcoin plus the altcoins. That's up about 60.85%. Bitcoin dominance, 41.81%. Let's look at the price of Bitcoin this morning, 46,000. Had that weekend surge, up about 4.91%. Volume traded, $33.92 billion. We see Bitcoin formed the support base above the 43,500 level and started a fresh increase and was able to clear the key 45,000 resistance zone. It opened the doors for more upside above the 46,500 level. Let's look at Ethereum now. We see that's trading up $3,139, up about 2.71%. Volume trading in Ethereum, $16.39 billion. It also cleared that 3,000 resistance and $3,150 resistance, and it's sitting pretty right there, looking to go above the 3,500 level at this point. Let's bring in Olumide Additional now, a financial market analyst. Hello, Olumide. Good morning. Happy Monday.
Yeah, this is a green Monday, Ladi.
Quite a green Monday, and apparently I see the sentiment in the market has entered greed after being in extreme fear for the longest time. And talking about adoption, it seems Bitcoin adoption is actually growing now, and it looks like it's taking a war to actually bring all this attention. How are you seeing it, Olumide?
Yeah, I share that sentiment exactly. If you look at recent statistics, the likes of ExxonMobil and the Russian government considering taking Bitcoin as a form of oil payments also brought in some form of support. But, ironically, the dollar has been very strong on today and smashing all risky assets, including gold that often investors use for saving because of high inflation. But the Bitcoin and the crypto market is being exempted. So the strong fundamental here is that the adoption is growing remarkably. And also, that has really trickled to the NFT space, where recent reports suggested that Mandela's arrest warrant was tokenized in form of NFT for about $130,000. Also, the Queen of Pop, Madonna, she went into bulk collection, spending almost $500,000. That has given some form of cushion. So, despite the fact that investors are concerned that the interest rate regime might somewhat tighten liquidity, I think the growing adoption and the increasing amount of people coming to the crypto market is really why we are seeing Bitcoin at $47,000 right now, Paddy.
Yeah, markets have really changed, at this point. In the past, the playbook is once the rates start going up, you jump out of risky assets, but we're seeing it different, at this point.
Exactly.
But Olumide, it's a new week. It's starting green. How are you seeing, the whole of this week for Bitcoin price action?
Yeah, good question. Despite the fact that we're seeing a remarkable run, I think the run seems to be too far, so I expect at some point it will be cooling. I think bookmakers will be looking at the $48,000 mark for Bitcoin. Any break above that, I think the bullish rally will continue. But I think from recent price action suggests that the bulls are stalking around the $47,000. So increasing dollar strength might weigh in. And let's look at what happens in Ukraine, Russia. Talks begins tomorrow. So any strong fundamental from that also could bring going back to $45,000. But I think relatively Bitcoin has raised the losses for this year, and bookmakers seem to be on the rallying side right now.
Yeah, I'm sure traders are getting really excited, at this point.
Yeah.
But how are you seeing altcoins? Which ones are standing out for you at this point?
Wow, that's very tricky. But I think for me, the altcoins that really are showing remarkable are those that have exposure to NFTs. And XRP also seems to be very exciting. XRP has been rebounding remarkably on reports that it means that the SEC might try to settle with them. And that's really giving them a support above the 80-cent level. I think also other coins like Chili's and those that have exposure in the sports vest are also going to rally. But having said that, I think it would be very wrong for us to ignore the metaverse tokens. So I think SAND for me is my major pick for the week.
Right, the metaverse token still reigning at this point. Thank you so much, Olumide. Always great to talk to you.
Yeah, thank you.
All right, now let's look at the top gainers. We see it's mostly green on that counter. We see Holochain, their blockchain network, they're up about 30.90%. It's double-digit gains we're seeing this morning. Filecoin, $24.61. That's up 26.47%. And we see EOS there. Not seeing EOS on the top gainers list for a while. Jumping up this morning, 22.47%. And Zilliqa's had quite a rally. It started about 4 cents, now trading at 10 cents per coin, up 19.55%, but it's done over 100% in just about 7 days. Talking about Zilliqa token there. And looking at the top 5 losers there, we see it's more of stable coins down this morning, showing that traders are getting their skin into the market and moving away from stable coins at this point. So it's quite an exciting green market we're having in the crypto space. All right, do remember that we at Channel Television do not sell any cryptocurrencies or securities. You have to talk to your financial advisor about that. And that's a wrap on the crypto segment and the program. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.